Welcome back to another podcast with Zeller. Today we have the Chief Business Development Officer of Algebra. Algebra is the fastest growing modular AMM, which has recently passed over 250 million in TVL. Working with big guns of the space such as Thena and QuickSwap, they are helping them reach higher trading volume and enhance capital efficiency. Adam, welcome to the show.
Yeah. Thank you for having me. I'm glad to be here, and thank you for having me. And let me also introduce myself. My name is Adam, and I work at Algebra since the beginning. So we started like around 4 years ago when Uniswap V3 was presented. We also started the work on consent liquidity. So right now we have our code base that is inside around 45 plus DEXs, and will be even more soon for both V3 and V4 with hooks. And not too much people know, but we originally started as a DEX. So we were a DEX before. And you know how it is, how it's complicated to survive in the DEX area, especially when you have big DEXs with millions of TVL inside. And we tried to do it on Polygon, but it didn't work quite right. So we decided to change the direction, and now we managed to get something from the business as a service provider. So yeah, that's how it turns out.
Yeah, you guys started off as a DEX, a decentralized exchange, and DEXs are hyper competitive. But your niche is really serving now DEXs and working with
Yeah.
these DEXs. How did you guys come up with that very specific niche? Because uh, helping construct modular market making, right? That I think that's something that's very hyper niche and requires hyper specific knowledge behind the space. So, how did you guys get there, and what was the journey like?
So as I mentioned, when we were surviving as a DEX, we were at our last breath, and we were dying. Eventually, our token was dying. Our technology wasn't getting like us anywhere, and only thing that we had is consent liquidity. And by the time, only Uniswap had consent liquidity implemented, and no other DEX was allowed to have it as well, because if they fork Uniswap, there will be consequences because they had a business license on their code base. And we were the only team in the DeFi world who managed to rewrite the whole code base with the concept of consent liquidity, adding our own stuff into the code base and presenting something new that won't have problems with Uniswap code base. And but it wasn't enough because people didn't know what constant liquidity was back at the time. And I think for some people, even right now, constant liquidity is a secret because that's too much impairment loss and people are losing their money instead of gaining something. But yeah, and we were competing at this time with the QuickSwap, the leading DEX on Polygon. And even they had big number of liquidity stored in pools. We had much less, but at the same time, we managed to compete with them and even have much greater volume coming through us because of the ranges. So QuickSwap at this time, they were V2 DEX, so with simple pools, and we had consent liquidity already implemented. So we playing around with ranges. We managed to get the closest range to get it compete with a high liquidity on QuickSwap, and that's why you need consent liquidity basically. And yeah, and then we met QuickSwap team in Dubai, and that's how it is. That's how it started. We agreed on doing something together, and then QuickSwap was our first DEX that we're working with. And after that, it just was simple enough to convince all the other DEXs to work with Algebra, because for any service provider, the most important thing is to get some achievements, some partners to show some results. And we had these results with QuickSwap, so it was quite easy to get going with all the other partners. And now we have plenty of them, including even Camelot that is leading on Arbitrum. So yeah, I'm happy it turned out like this.
And what was the journey like for you guys to get to 250 million TVL? Was it exponential growth after you hit strike a deal with QuickSwap, or was there a lot more work that needed to get there along the way? What was the keys
Yes,
unlocks for you guys?
yeah. So getting liquidity is a little bit complicated, because for some DEXs, even 1 million of liquidity is a pretty big number, and but all the liquidity comes from our biggest partners. So let's say QuickSwap has around 50 million locked in our contracts, and then there is Camelot with around 60 or even more right now locked in their contracts. So every big number comes from a big partner. And outside of that, we have a plenty of small partners, but they don't have such amount of liquidity. They have like from 1 to 5 million locked in contracts, and I think that's fine. So we don't need to have all the big players adapting algebra. It's great to have some variety on the market with the Trader Joe model, with all the other models that there are. But at the same time, we're trying to get as much strategic partnerships as as possible, and it was I think jumping highly from 0 to 50 million, then to 100 million, then to 150 million. So it was like instant growth. But at the same time, it was within big partners integrations.
And for the audience that is interested in sort of like the technicality or how sort of like a DEX works or an AMM works or a clam works, could you please describe maybe in a bit more detail like what really goes on under the hood? How is this sort of different from a centralized exchange?
Yeah, so in DEX operations, there is no entity that controls anything. So basically, when you're trading on taxes, there is tax that can block your money, that can do whatever they want, and you don't have any access to your money unless it's on some cold wallets, and you can only trade with it on DEXs. And Dexes, essentially, you can call it like Texas, but with running on smart contracts and without anyone on top of it. So, of course, Dex has all the resources to also operate, but they don't owe you money, they don't store it anywhere. So, basically, you just create some operations on the Dex. And how it works, of course, you don't know what's inside the taxes, how it operates inside as an ordinary user. You don't know how the swap proceeds, and where they get liquidity from, and if there is any liquidity there available. So they won't show you these numbers. But at the same time, on DEXs, it's pretty clear, and you have liquidity providers who have their own liquidity. So they create a pair of tokens, and they locked it in some DEX. And there are traders like me, for example, who creating this volume coming to the DEX, swapping from one token to another, and in return, liquidity provider he gets some fees from me, I can say. So yeah, basically it's just open market where you have people who have the liquidity and you have people who swapping and trading on top of this liquidity. And DEX is just an entity who have it all sorted and stored in one place. Yeah, and you don't need to go anywhere else.
Yeah. And most decks are monolithic, would you say? Or before your solution came out, they were previously monolithic, but now your solution has allowed them to be sort of customizable. What is sort of like the difference between the two? And what's the advantage of using your core?
Yeah, so basically, uh, we created a new approach of modular architecture. It wasn't that long enough because Uniswap presented the before idea where you have liquidity pools and you can add custom logic on top of these pools, and we saw the potential it has, and we decided to also think how can our code base, current code base, um, be, and how it can be added on top of it. So basically, if we say about Uni v4, is first of all it's not out yet, and we don't know when they will deploy the v4 version on the mainnet, because right now they are busy with the chain they presented recently.
Mhm.
At the
Yeah.
same time, we have this technology live and running on different dexes already. I think around 25 dexes are running on our modular architecture. And what we try to solve with our modular approach is to get more flexibility to the dex. So let's say in Uniswap, you have your hook implemented, and you can't change it without liquidity migration. And what we did, we gave DEXs the ability to migrate, to not migrate liquidity, and just to change hook on top. So for example, if you have some adaptive fees on top of the pool, and you think that this technology is outdated and you want to have something else, you just simply replace it with a new hook that you think will be more successful. So yeah, so that's how it's done. So basically, we're just trying to solve the main problem for Dexes. That is a, like a need to migrate where whenever there's a new update.
How do you see the DEX competitive landscape? Because I guess you could say like the OGs like Uniswap still exist, and as you mentioned, they're going into launching their own layer two. They're going into some
Yeah.
other places, and then there are sort of new incumbents such as Bloom, who launched on Ton, who's sort of like a style of an exchange, right? It's not they sort of aggregate and have exchange. Like, how do you see the competitive landscape on the deck side and above? I guess like the technology. Let's say that they use like you have a couple that use your technology, like they all have that capabilities. Like, how do they compete? Like, what actually sets them apart?
Yeah. So there are two kinds of competitorships. So basically, the first one is when you're competing with a DEX on chain, on the same chain as you are. Let's take some example. For example, QuickSwap and Uniswap on Polygon. So they are running completely two different models, but at the same time, the same concepts. And the only thing that matters in this case is marketing and the amount of users and liquidity locked in contracts. So that's what matters the most. And the second is the when you say like a base on base like Velodrome, Aerodrome, or Trader Joe or Camelot, they are competing with each other with some results. Even though they are on different chains, at the same time they try to show that their model is efficient enough. uh, But at the same time, if we're talking about architecture of the DEXs, so everything comes from Uniswap. And even if we take a look at Velodrome, Aerodrome, they did a great thing with V33 model, and their approach is beautiful. But at the same time, if we dig deep inside, they fork Uniswap and they added some stuff on top. Basically, you can say that we did kind of the same, but with more rewriting of the code base. So, so from one hand, it's more safer to have Uniswap code base implemented without any changes, and on the other hand, if you want to add something new, you need to change the core much, and it can lead to some threats potentially. Yeah, and even if these DEXs are competing, at the same time they share the same code base. So I think it's just how they attract the users, how they manage the operations, and how they do their marketing, and that's kind of it. And liquidity also matters the most. And if we talk about Ton is a little bit different ecosystem, and I can't say that anytime soon there will be such competition as on EVM chains, because for users, Auton are not mostly EVM users, so even V2 technology is kind of new for them, and I'm not sure what will be when they will find out there will be a V3 technology. So right now, what we're doing, we're also creating a DEX on Ton, and we're bringing consent liquidity to Ton, but I'm not sure how it will go because users, they don't know what is it and how it works. Yeah.
What's the difference between V2, V3, and V4?
Yeah. So uh, between V2 and V3, it's a huge gap because now you can um, create custom ranges of your liquidity, uh, and this range that you created, it will work times more efficient compared to the full range, because more trades coming through your own position, but at the same time you can suffer greatly from impairment loss because you allocate a huge amount of liquidity on a closed range, and if the price moves, you will lose some part due to impairment loss. And that's why, as I mentioned in the beginning, we managed to compete with QuickSwap because we had consent liquidity and we had really tight ranges of liquidity. And if we talk about V3 and V4, so it's not that huge gap as between V2 and V3, because V4 is the same consent liquidity, but with the hooks on top. So I can say that V4 is just an upgraded V3 version. And you can, of course, you have more use cases with V4, but it's not like completely something new to the market that will change the landscape as it was with V3. And I think maybe when there will be a V5 version, it will be something new. But for now, it's just like just better version of V3.
Is this problem of liquidity the same problem that plagues the bridge ecosystem, like bridges? And do you guys work with bridges?
So for us as Algebra, it's not important to work with bridges or with aggregators or with someone else. So maybe we work closely more with aggregators, but bridges, I think it's more for the it's more for the chains than for the dexes. And on top of Algebra, there are more than 100 projects deployed and operating. So because some dexes, some huge dexes are sharing the same code base, our code base, there are a lot of projects that are built on top of these dexes. And that's why we have a lot of projects, including aggregators, cross-chain swaps that using bridges, and all the other projects. But yeah, for us, it's not that important.
As a hyper technical product and as the chief business development officer, I wanted to pick your brain and share with the audience sort of what is it like selling a hyper technical modular system to dexes. Like how should somebody who is in the same position or somebody who is sort of in the same space of selling B2B or and manage hyper technical systems, how should they think about selling, and how do you also go about marketing that product also?
Yeah, so business development and marketing are completely different segments in the companies. So basically, if you want to have a great selling and a great marketing, you need two separate teams doing so. And marketing, in our case, it helps spreading the word about algebra and what benefits we have to the larger audience. And what business development doing from my side, we just getting and providing more close contact to people who are interested in our solution. Um, and when we were only started, it was a lot of field work where we had to approach some dexes directly and ask if they're interested in our solution, explain them why do they need our solution and what it will give them. And when it was just V2 and V3, it was pretty easy to convince people to get a new model because they all were V2, and V2 is not that efficient enough. And Uniswap already had some results, and all the other DEXs as well. So it was pretty easy. And with V4, it's much more harder because they can just fork V3 and they don't know why do they need V4 now. So there is a lot of explaining and teaching people what exactly V4 is, how our code operates, and presenting them idea of strategic partnership where they will get much more in the future instead of having and building their own. And to be honest, there is no um, there is no great number of companies that can build their own code without even only forking it. So let's take, for example, Velodrome, Aerodrome. It's a huge team, and they have their own resources with their technology. So they can experiment, they can do some researches, they can, and they are really smart team. So they can do a lot of stuff in house. And if we talk about some small team that doesn't have, they don't have any resources at all, so they need someone like our company that will help them get the best technology on the market. So yeah, basically, it's just constant work in the field and constant presentation of what we can bring to the table.
As the chief business development officer, how do you think about Algebra's moat, in the sense where you guys are? There's obviously like some technical costs in unplugging you guys, but there's also technical costs in implementing you guys too, right? And then you also mentioned that as you move over to V4, it becomes quite challenging because it's almost similar to V3. How are you thinking about your mode on Algebra side, and essentially like what are the strategies that you put in place for that?
You mean for what? Sorry.
From Algebra side, like what are the mode and what is the mode that you have thought about from Algebra side, and what are the strategies that you put in place to enhance this moat?
And by mode, what do you mean by mode?
Moat as in like protection as a business. Like moat
Oh, okay,
is
okay.
like a
Yeah, yeah.
like protective force as a business. Yeah.
Yeah. So basically, we are running on, I can say, fees that we get from our partners, and it's not that great number, and usually, but it's enough to have our business self-sustained. And even on the bear market, we managed to survive due to our operations and our fees that were stored. So basically, we have a financial team managing everything, and it's been pretty great decisions from them. And overall, yes, as any, like, it's quite surprising to have a working business model in crypto, in DeFi overall, because you can see all the other projects, they are operating and they are surviving only because they have some funds raised.
Mm.
And we only raised once when we were only starting for the DEX, and right now we didn't. We just like surviving on our own fees for like 4 years straight.
Mm.
And I see a lot of projects also trying to implement our business idea, our business like fork as a service idea, but at the same time, I don't think that it will be that great success as we had, because we don't have our own project, our own DEX that we need to operate, that we need to think about. We can just completely focus on creating more partnerships and more and more partners coming through. But at the same time, of course, there can be an end to this model. Let's say if we won't bring something technical enough to the table, and if we stop doing all the researches and development, then I think we will only survive for maybe 3 years straight, and then we eventually will die as a company. But as long as we are focusing on development, I think we are good to go for even longer run.
How do you think about Dex itself as a business? Considering that you guys came from Dex, now you guys work with Dex. Is it like a one side takes all type of business? And uh, in the long run, when more institutional money comes in, do you believe that Dex will have the same draw that a checks has to institutional money, or how do you think that that will play out?
Yeah, so the only DEX that will be successful is a DEX running for and gaining help from the chain itself. So most of the times, uh, only the winner takes it all. So let's take, for example, QuickSwap on Polygon. Let's take Trader Joe on Avalanche. The same story with Velodrome and Aerodrome. We have like Camelot and Arbitrum. So of course there will be a lot of competition, but at the same time, there are some winners that will have most of the attention and most of the liquidity stored into them. And I think that's kind of the problem, because, of course, all the major dexes are supported highly from chains, and chain can give them liquidity to start with. They can give them incentives that they will distribute through their audience, and as long as you have great relationships with the chain, I think you are good to go. But in other case, I think any DEX will face some problems, because you will need to have some incentives, and you can't just give out from your pocket, or you will have to get some liquidity to start with. So there are a lot of problems, and I can say that DEX business is quite expensive to operate in the beginning. But if you play your cards right, then uh, you will have all the things that comes with operating a DEX and like winning in this competition.
And how do you see institutions playing into the deck space? Do you think that institution monies will start to access some of these tokens that don't exist on the checks, or what are you seeing from your inflow side in your conversations?
Yeah, I think institutions' money will. They already are in some DEXs, in large DEXs, but basically, I think they will go to the DEXs more and more to the DeFi, explore DeFi, especially with all these government control coming through the centralized world. And I think DEXs will be the great place to for these institutional players to reveal the full functionality and the full advantages of DeFi world. But I think it also will be more clear with the Unity 4 release and even what we have right now, because with the hooks, you can provide much more to the institutional players that they will be more interested in providing the liquidity to the DEX. For example, with the hook, you can create a KYC model and whitelist some people trading on these pools, and it will be more interesting to the institutional players because everything will be clear, and they know that they won't have any problems with their liquidity.
What are your thoughts about um, predictive markets? Because predictive markets may have a similar liquidity problem, and there are a lot of predictive markets coming out these days. Any thoughts from your side, Adam, on predictive markets?
Yeah, of course, we were exploring the predicting markets as well, because like I'm trying to know where exactly can algebra be implemented. Maybe we can also have some hooks on top of the prediction markets, but for now there are not that much projects doing so, and we are ready to help, and we are ready to create some hooks, custom hooks for predicting markets, and even from a dex side. And I think that there will be a case where we can do that, but for now I'm just like looking at what's going on and trying to get the right moment to fit in these solutions. But as you know, the predictive markets are not like they are not dex is not the first option for them, so they are focused more on their own stuff.
And as the head of business development, how do you think about entering into new sort of verticals with your current solution?
Yeah, so I'm trying to get as much business opportunities as possible from for algebra. So we are not only fixating on the DEX. As I said, we are also coming to Ton, and we are trying, I can say, to chase the trends, but at the same time not to like get our fully attention to it, because we need to confirm that eventually it will give us something in return. So, for
Hmm.
example, if Ton won't work out for us as a DEX, then we can also return to our previous business model and just to have more DEXs with our code base on Ton. So that's only
Right.
so so we're trying to get and try new areas of the business, but at the same time covering the potential losses that we may have.
Right. Right.
Yeah, and the same thing with hooks. We're exploring hooks, and we believe that they will give much more on the dexes once uni before we live, and there will be more builders of the hooks.
So I wanted to move towards sort of like your perspective
Mhm.
of the current crypto markets right now, given that you are sitting in a very unique position, 250 TVL. There's not a lot of not a lot of companies that can say that they sort of reached that. While over the last, I guess, week, we've seen the market sort of rise since the previous drop, but we're still sitting in sort of like a linear range that hasn't broken out and for the last 7 months. And people might say like that's the bull run, right? Because institutions actually come in. What is your thoughts about how sort of like the markets have played out over the last 7 months, and what do you think that will look like into 2025?
Yeah, I think there will be something to explore in 2025, but for now, I don't like you fully understand with the current price actions what will be next, and I don't think that's a great idea to have predictions because we saw what it was with Bitcoin ETF approval, and it was, I can say, a fake pump, some kind of. But so yeah, market is holding strong, but at the same time, I don't think that I need to ape in right now and catch something. So for what I'm doing right now is paying attention more to the altcoins directions and explore, and I will suggest explore more about different ecosystems and what is coming through, because like we see optimism and what they're doing with super chains. We see arbitrum and that what they're doing with orbit solution. ZK sync is now doing the same thing. So there are a lot of things that will potentially be play out greatly. Even like exploring better chain and buying a bunch of NFTs will have more and give you more in the future.
You mentioned Berachain. Berachain is like one of the series of new L1s coming to the market, including Monad and
Yeah.
Movement and stuff like that. Like, what is your thoughts on like the current new sort of chains that are coming out, and how do you sort of position yourself as Algebra, given that these are new chains, they have no DEX players in the space. How do you sort of position yourself on that?
Yeah, we're trying to have a conversation with Dexus, and we're trying to secure the one of the first Dexus position there. So I'm trying to find a new partner for any new chain coming up, and there are a lot of chains coming through, especially with in the recent I think year, with all the L2 narrative going on and more chains coming through, and people are struggling to get something from the airdrop, and investors are disappointing in chains. So yeah, even if I don't believe in some chains, I'm still will be trying to get as much as possible to get Algebra there, because like a worst case scenario, chains will eventually die, but at the same time we tried and we are betting on everything. So some chains may succeed and some chains will die. So yeah, we don't really care that much because we don't have our own decks there. And speaking about like better chain, and I think that's exactly where what market needed, because how they operate with all the native projects building on it, all the vibe and memes coming from Better Chain. And I think it will be one of the best chains in the recent years, because I don't remember having that much fun with the chain for quite a long time. And it's not like even about technology, even though the proof of liquidity is a great concept, and you can say better chain is a big v free DEX, I can say.
Yeah.
But at the same time, I think it's all about marketing. And even if Berachain doesn't have any marketing team, how they position themselves, it's like it's a unique situation.
Yeah. Yeah. Chain has done a really good job in marketing themselves, right? Like
Yeah,
they just understand how to be sort of this era, right? They understand how
yeah,
to
yeah,
keep.
exactly. From NFT to a chain, that's a huge success, I believe.
Yeah, it is. It is a massive success, and so like considering that like the markets, the crypto markets, they have 4 year cycles. At least like that's what we've seen over the last like 3 4
Yeah,
cycles, um, and sort of like DEX volume comes from market movements, right? Like basically
yeah.
people are interested in buying tokens and stuff like that, and that normally comes through uh, in the bull cycles. How do you think about Algebra's positioning when you enter into the bear cycle? How are you preparing yourself for that, and how are you thinking about that in general?
Yeah, so of course, with a bull run, our volume is high on every DEX, and we get more and more fees coming through. So of course, uh, have we will win over the bull market for sure. But at the same time, we're trying not to focus more on what will be next, and we try to work with what was built already. So to give you some like to give you some insights, when we were starting only, there was a bull market, but at the same time, when we decided to approach a business like as a protocol, we were already at our lowest point in crypto. So basically, without knowing that it will rise. And We continued our work, and we didn't care much about it. So there were some dexes that we saw can be our potential partners, and we just worked all the way through the bear market. And I think even with a bull market, it will be much better for us as a company. So I can say that we used to work with negative conditions, with not that great markets, but at the same time, um, it will be great to see what we will get with all these fees coming through, because we don't know will it even be enough, or because like it's I can only predict what we will get, but I don't fully know. And yeah, and even as mentioned, we're trying to get more business fields in more business fields. And let's take meme coins. If we, for example, will cover the deck side of some pump.fun protocol, or some, like for example, then we are trying to get into the meme coin area, where from meme coins there's a lot of volume coming through. And yeah, I think that's one of the directions we are heading.
And in terms of like the meme coin space, have you guys how does sort of like pump.fun work, right? How have you seen from your learnings of how they've done it, and how are you planning to sort of penetrate into the meme coin space um, further, so as they provide a lot of volume?
Yeah, so I will describe on the project that we are working with right now. So recently we created a partnership with Honeypot Finance, and it's you can say meme launch pad on Bera chain, and they have a couple of segments. The first one is, of course, the launch pad itself. So for the memes, um, because memes they need some place where they can be launched, and they need some audience, and that's the best way. But at the same time, uh, these approaches, these projects, they need some place to store the liquidity. Of course, you can launch a token and you can allocate the liquidity on some other DEX, but it will be it will be much better if you just create your own DEX and allocate all the liquidity from the memes there as well that you are launching already. So that's exactly what we will doing with them. We will cover the DEX that they will have and where all the liquidity will be stored, and they will cover all the launches of the memes and everything else.
Right. That's really interesting. That's really interesting. I mean, meme coins has been, uh, I guess you could say like this cycle's NFTs, right? Like they've been like the thing that's been really driving the market. And so I wanted to ask you as we wrap up this conversation. I think we've dived a lot deeply
Mhm.
into sort of like the deck space and what Algebra is doing. I'm keen to know like what's next for Algebra. What are some major milestones that maybe you can share with the audience, and where are you looking to in the future?
Yeah, if you asked this question like 6 months ago, I would say launching our own chain, but so with the current conditions, I don't think that it will be a great idea. Maybe someday, but I don't know. So yeah, so the next steps will be just doing more with our integral and creating more use cases for hooks. Uh, that's definitely our approach, what we will be doing, and also exploring the new technologies that we have. It's called liquidity layer, and basically, what it does, it combines liquidity on a couple dexes. So basically, if there will be free dexes on algebra technology launched on some chain, they can all have some joint pool with shared liquidity.
Hmm.
So that's our idea for now, and we are trying to get it work and deploy it in the next, I believe, 6 months or so.
That's really cool. I want to leave this last part. If you had anything that you wanted to share with the audience as we wrapped up, maybe some closing
Yeah,
statements.
so yeah, I can say that for audience, it's the best suggestion is just to explore what's in the market and not to chase all the narratives, because if people talk more like a lot about some kind of stuff, you already miss this opportunity. And just to learn more about dexes, about Case liquidity, how it works, because if you will get familiar with ranges and everything, and you will search for incentives on some chains, or even get into the V free area, I think that's the only places where you can earn some money instead of just chasing memes. And it's more like smart approach where you won't lose all your money on some dumb meme called some dumb name. I don't know how I did it in the past. So yeah, basically just try to get as much as possible from the dexes.
Yeah, I think that's a really powerful advice to not be driven by the hype too much, especially since
Yeah,
algebra really came from Dex and really found your niche and was able to ignore sort of the noise and now you guys are hitting record high TVLs,
yeah,
and that's very powerful. Adam, thank you so much for your time. Thank you everybody for watching. We will put information in the description about algebra, about Adam, and everything that they're doing. Thank you guys for tuning in.
yeah. Thank you so much.